This is Nightly Business Report with Bill Griffith and Sue Herrera.
Wall Street whirlwind. The Dow stages a 450-point comeback, ending the day higher, and it was all because of trade. Trade-proof stocks. Our market monitor this week says he's investing in names that will perform well no matter what happens with China. Disappointing debut. Uber takes a ride to Wall Street, but it didn't receive the warm reception expected, and shares of the high-profile IPO slip. Those stories and much more tonight on Nightly Business Report for this Friday, May the 10th. And we do bid you a good evening, everybody, and welcome. Sue is off tonight. As anticipated, it was a busy Friday in Washington and in New York to close out this week. Uber shares began trading, and trade talks with China ended with no deal. But we begin tonight with the big reversal on Wall Street. It was all because of trade. After a tense start to the day and a 350-point decline on the Dow, President Trump hinted that there was a chance that the tariffs on Chinese goods could be removed. And word that the trade talks themselves will continue soothed some other fears. And stocks took off. At the close, the Dow was up 114 points, back to 25,942. The Nasdaq added 6. The S&P was up 10. But for the week, it was a tough week. The Nasdaq and the S&P suffered their biggest weekly declines of the year so far. Bob Pisani has more on all the day's downs and ups.
Wall Street went on another wild ride today, with the Dow sinking more than 350 points at its lows after the White House followed through with its threat to raise tariffs on $200 billion in Chinese goods. All three major averages closed out one of their worst weeks of the year, down about 2% across the board. But stocks managed to end well off session lows, basically flat during the day. So what exactly is keeping the markets afloat? The key is the market's refusal to believe that there's going to be a long trade war that would be ruinous for both sides. The market has consistently chosen to cling on to hopes that a trade deal will get done eventually. And they did it again today, rallying after Treasury Secretary Steve Mnuchin said the talks with China were ongoing and constructive. And that was it. And it took another leg higher on a single tweet from the editor of a Chinese news outlet saying trade talks had not broken down and that the two sides agreed to meet again in Beijing in the future. Overall, investors believe that if we end up kicking the can down the road on a trade deal for another month, that's fine. But if the trade wars carry over into the election, then global growth and earnings estimates will seriously have to start coming down. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
And from Wall Street to Washington, investors were watching our nation's capital for any and all developments on the trade issues with China. Kayla Tausche was there for us.
Companies shipping printers, handbags, or frozen fish, and 5,700 other items from China will see their bill rise sharply when those goods reach U.S. shores in a few weeks, if there's not a trade deal. President Trump tweeting that talks with China were constructive and candid and will continue into the future, and that tariffs may or may not be removed as part of negotiations. China said it regrets that the White House heightened tensions, and it will have to retaliate, already reportedly buying Chinese stocks to soften the fallout. U.S. officials say China's at fault for the escalation after reneging on already agreed upon parts of the deal late last week. China's vice premier still showed for talks in Washington, where he met with the trade representative and Treasury Secretary. He said, "I come here under pressure." But after 4 hours of talks Thursday evening and 2 hours Friday morning, a cordial goodbye between the counterparts. Clete Willems, the top White House trade negotiator until 2 weeks ago, said a deal may be delayed, but not off the table.
There has been a lot of back and forth. There's no question about that. And that's why I'm saying I think we still can get to a place where there is an agreement. However, it is very significant that they aren't willing to commit to specific things at this point. And it's critical for the United States that they get those commitments so that this deal can actually be enforceable and make a difference over the long term.
In the meantime, economists say U.S. consumers are already on the hook for about $69 billion in added costs from tariffs, $767 for the average family of four. But President Trump says there's absolutely no need to rush a deal, tweeting that the wealth created by tariffs will be greater than any deal. For Nightly Business Report, I'm Kayla Tausche in Washington.
Now, we have been reporting all week on how tariffs are impacting various industries and businesses. And tonight we take you to different parts of the country where the trade tensions are definitely being felt. Contessa Brewer is with the Lobstermen in Northbridge, Massachusetts. Diana Olick reports on the home remodeling industry from Washington. But we begin with Jane Wells at ground zero for Chinese imports, the Port of Los Angeles.
Yeah, you know, a funny thing is happening in this trade war between U.S. and China. Companies are finding workarounds to avoid paying tariffs. How?
The Chinese factory might own a production site in Vietnam. They simply move the production from China to Vietnam. The Chinese factory still makes the profit, but the U.S. importer is not taxed because the goods are coming out of Vietnam.
Okay, let me throw out some new numbers in this trade war. According to a congressional group which monitors USChina trade, during the first quarter, U.S. exports to China fell almost 20%. But check this out. At the same time, overall U.S. exports grew 0.3%. So while China's not buying as much of our stuff, somebody is.
We are starting to see some more goods coming out of Southeast Asia and the India subcon, but not nearly enough to make up for the China business.
The ports themselves, meanwhile, are doing fine. Along the Pacific, LA's container traffic is up almost 5% year to date. Oakland had its busiest April ever. That's because imports have surged, many from China, meaning tariffs are being paid, but not by China.
And Amazon incurred over $1 billion in extra cost on the last round of tariff increases. Walmart, $250 million. And so this ball just keeps on rolling and getting worse and worse for importers in terms of cost management.
But cargo that's moving on the water right now will not be impacted. So we really won't see a change for the next couple of weeks. And at that point, we'll take stock of where orders are going.
Okay, is this affecting the U.S. consumer? Well, it depends on what you buy, but overall, inflation is still only 2%. What about the hit to GDP? Okay, bear with me as I show you one more number. During the first quarter, the drop in U.S. exports to China shaved this much off GDP, 0.04%. That is $6 billion. That's not nothing, but the president claims the U.S. Treasury is raking in several times that amount in tariffs. For Nightly Business Report, I'm Jane Wells at the Port of Los Angeles.
Now to Contessa Brewer in Northbridge, Massachusetts, at a company feeling trapped by tariffs.
As the steel mesh rolls off the welding machines at Riverdale Mills,
A tariff is really a fancy word for a tax.
the CEO is really feeling the heat.
When we get an invoice for steel, we pay the invoice for the steel, and then we pay the invoice for the tariff on top of it. China's not paying that.
Riverdale Mills makes more than 3,000 kinds of steel mesh products, everything from high security fencing to the mesh for oyster cages. The mesh manufactured for lobster traps goes into 85% of all those built in North America. But the lobstermen are increasingly repairing their traps rather than buying new ones. That's in part because the market for lobster in China plummeted when China slapped 25% retaliatory tariffs on American lobster.
The reason we can't pass that cost along is because we have foreign competitors that are not under the tariffs that we're under. So we have to maintain the same price that they have to compete in the global market space.
When steel tariffs went into effect March of 2018, steel prices nearly doubled. Riverdale Mills has absorbed nearly all of that cost. It has applied for exemptions from the tariffs, but of those granted, it only applies to roughly 3% of its steel purchases. In the meantime, to keep its profit margin steady, it has tried to find cost efficiencies in other areas, including reducing its workforce by 25%.
I understand the intent of the policy, but that policy hasn't helped us. It's actually hurt us from a competitive standpoint.
Another round of tariff hikes, more threats from China for retaliation. And these U.S. manufacturers say navigating the global trade war requires nerves of steel. For Nightly Business Report, Contessa Brewer, Northbridge, Massachusetts.
Our next stop, Washington, and Diana Olick.
Are you looking to remodel your home? You might want to take another look at your budget because the costs are suddenly going up thanks to higher tariffs on Chinese goods. From tile to countertops, laminates to lighting, all those fancy finishings, about 450 of them, are on the list that just went from 10% tariffs to 25%. That represents a $2.5 billion cost increase.
At the end of the day, yes, pretty much every kitchen and bath remodel, the price is going to increase.
Case says there is simply no way his business can absorb those costs and still survive.
It's probably a 7-8% increase, net increase to the consumer. And I'd love to be able to eat some of that, or help with the consumer and not just pass it along. But at this point, I don't know a way to engineer around that. To use different products that aren't affected or anything like that.
Builders were already struggling with a labor shortage, which also cost them more, and that is also getting worse. Nearly 3 out of 4 remodelers this year reported higher prices for customers due to higher costs for labor, according to a new survey from the National Association of Home Builders. Higher costs for labor and materials have some consumers reconsidering their renovations. Case said the size of the average project went way down last year as consumers tried to cut the budget.
And that's my concern for this industry, is because we're going to price ourselves out of the market.
A real concern that hits home. For Nightly Business Report, I'm Diana Olick in Washington.
Meanwhile, a Federal Reserve official is weighing in on the impact of tariffs. Atlanta Fed President Raphael Bostic said today that the central bank might have to cut interest rates if consumer spending suffers, which economists say could happen if the new round of tariffs lasts long enough. He added that most businesses have not yet passed cost increases on to consumers, but there's a chance that will have to change. And in fact, the latest report on inflation showed that consumer prices rose in April once again. The Consumer Price Index increased 0.3% last month, lifted by rising gas prices, rents, and healthcare costs. Over the past year, the index has increased roughly 2%, which is right in line with the Fed's target right now. Time to take a look at some of today's upgrades and downgrades. We begin with shares of Ford. They were upgraded to buy from neutral at Bank of America Merrill Lynch. The analyst cited the automaker's strong lineup of utility vehicles and trucks. Price target now $14, and shares rose more than 1.5% today to $10.38. United Healthcare was upgraded to buy from neutral at Citi. The analyst calls the sell-off in managed care stocks on fears of Medicare for all overdone. Price target $280. That stock gained 1% to $240.59. And Pinterest was initiated with a buy rating at Nomura Instinet in new coverage. The analyst calls Pinterest the fastest growing of all the companies that he covers right now. Price target $34, and shares rose 1% to $29.05. Still ahead, rocky road. Uber went to Wall Street to start its next chapter, but investor enthusiasm was not there to greet it. It was one of the most talked about IPOs in years, and today Uber finally made its Wall Street debut. It was an offering that captured the attention of investors on Wall Street as well as drivers and passengers on Main Street. But when the rubber finally hit the road, the enthusiasm just wasn't there. The stock notched a rare first-day decline for such a high-profile IPO, falling more than 7% to close below its IPO price. Deirdre Bozo takes a look at what happened.
It was the most talked about IPO of the year. But on its big Wall Street debut, it fell short of expectations.
But at this price, it reflected the environment. And listen, the environment is uncertain right now. And any time there's uncertainty in the market, investors are going to be a little hesitant to put $8 billion of their dollars to work.
The road to Uber's initial public offering was already bumpy. Its smaller rival Lyft went public about a month ago, and it has struggled in public markets as investors question its business model and wonder when, if ever, it will ever stop losing money. Uber's losses are far larger, and it's spending more on expansion in other businesses like food delivery and trucking.
The amount of money they're losing is massive, and that has happened before with Amazon and other companies. But this is a lot of money, and the question is, where do they figure it out?
There are fundamental issues with Uber's business model. There are long-term issues that should give everyone pause. And when you raise $8 billion on an IPO, by definition, you are swamping the market with supply.
Choppy markets amid worsening trade tensions between the U.S. and China didn't help, making investors less willing to take on an already risky listing.
This was a little bit of a rough week in the markets. You guys would be no better than me. I think the Dow was down about 300 today. There was a lot of discussion about tariffs. And so if you look at most of the broader markets, I think this was a tough day. And as you know, that matters on sentiment. There have been some IPOs that have not traded as well as you would have liked over time.
Still, Uber CEO Dara Khosrowshahi is looking ahead to the future and not just its first day of trading.
We're going to be measuring success in 3 to 5 to 10 years, not in one day.
Not just Uber. The real test for the ride-sharing industry at large is still to come. For Nightly Business Report, I'm Deirdre Boza.
Now, with today's IPO, Uber's market value is just below $70 billion, certainly enough to qualify it to join the Standard & Poor's 500 index. However, you won't find it there anytime soon. Mike Santoli explains why.
Uber made its long-awaited public debut Friday as one of the 100 or so most highly valued companies in the stock market. But it's not clear when or whether Uber might find its way into the market's key index, the S&P 500, or into the trillions of dollars worth of funds that track it. At its initial valuation above $80 billion, Uber is more than 10 times the minimum size to gain entry into the S&P 500. But the index keepers at Dow Jones S&P indexes require that the member companies report at least 4 quarters of profits using standard accounting measures to be considered for membership. Like many fast-growing Silicon Valley tech giants, Uber has never earned an annual profit, and analysts don't expect it to in the next couple of years. Like its smaller rival Lyft, Uber is investing heavily to recruit drivers and sign up new customers while subsidizing the cost of rides. It's common for new IPOs to wait years before joining the S&P 500 if they ever get in there at all. What's unusual in today's market is the vast size of the established tech companies that are coming public after years in business with billions in revenue but no clear path to profitability. Following Uber's IPO, aggressive office-sharing startup WeWork is planning to come public while still deeply unprofitable as well. This will leave a fairly large amount of market value assigned to emerging disruptive tech giants, but not reflected in the market benchmark and not owned by low-cost index mutual funds and ETFs that have become, by a large margin, the most popular investment vehicle for retail investors. Whether their absence from the S&P 500 is a good or bad thing for index fund investors won't be clear until the market renders its verdict on the long-term value of Uber and its peers. For Nightly Business Report, I'm Mike Santoli.
Marriott reports a sluggish start to the year, and that's where we begin tonight's market focus. The world's largest hotel company reported weaker than expected revenue growth, but Marriott described its business as stable thanks to additional fees and higher room prices. The company also benefited from a lower effective tax rate. Shares finished the day down about almost 3% to 131.71. Viacom reported a decline in revenue, but lower operating expenses helped lift its profit. The media company faces shrinking distribution fees and a decline in its core cable television business, but investors were encouraged by efforts to find growth beyond traditional television in things like streaming. That stock was up nearly 2.5% today to $34.70. Equifax reported earnings that matched Wall Street estimates, but revenue once again missed forecasts. It also issued a soft second quarter forecast as well. The credit reporting agency says that costs related to its 2017 data breach now total more than $1 billion, and that stock today was up a fraction to $119.40. TiVo announced it's going to be splitting into 2 separate companies, one for its product division, and the other will focus on intellectual property licensing. The maker of set-top boxes and digital video recorders is looking to complete that deal early next year, but investors are questioning that timeline. They sent the stock nearly 14% lower to $7.56. That is a 20-year low. Private equity firm Sycamore Partners has offered to take Chico's private, but so far the women's retailer has not responded. Chico's CEO was abruptly terminated last month, and Sycamore says that suggests that there are serious issues with that business. Sycamore's offer is to pay $3.50 a share. Chico's shares were up nearly 8% today, above that price now at $3.99. Time now for our weekly market monitor, who has names of stocks that he says are immune to the ongoing trade issues at China. And he says they're cheap, too. Ernesto Ramos is with us tonight. He's head of equities with BMO Global Asset Management. Ernesto, good to see you again. Welcome back.
Thank you, Bill. Nice to see you.
They're in different industries, but they each have, even though they're not immune to, they are immune to trade issues with China, they do have their own issues. And we start with Pfizer. I mean, a lot of the pharmaceutical companies right now facing cost pressures and patent issues as well. Why do you like this company?
Well, Pfizer in particular has a very strong flagship product pipeline, as well as strong protections on their patents. So they're relatively in good or better shape than their competition. And the fact that they trade at 14 times earnings is the main driver of our attraction. So we're looking for companies that have a strong fundamental case for their growth and an attractive valuation. And that's the case with Pfizer.
All right. Then there's Citi. Everybody thought the financials would do well this year if the interest rates kept going up, but now the Fed's on hold. So what about them?
Well, Citi is actually my top pick for tonight in the sense that it trades at a very, very low valuation of 9 times earnings, under book value. Since the financial crisis, Citi has embarked on a multi-year restructuring plan, investing in technology, and has increased their profitability very, very nicely. And therefore, for the longer-term investor, this is my top pick for the night because of those continued improvement in fundamentals and a very attractively priced valuation.
All right. Finally, in the utilities area, Exelon, they have nuclear issues, but they've done pretty well here, even though there have been expectations of higher interest rates.
Well, utilities have been so overbought by investors, so in love by investors, that they've risen in valuation to very, very high levels. Exelon is one of the exceptions. They're only trading at 15 times, which doesn't sound that cheap. However, the rest of the sector trades at 18 times, and they are very defensive in a market that becomes more volatile as trade issues and other macroeconomic concerns that dominate the headlines. This is a stock that would do very, very well.
All right. Ernesto, again, good to see you. Ernesto Ramos with BMO Global Asset Management. Thanks for joining us tonight.
Thank you, Bill.
And coming up, the final frontier, Amazon style. Here's what we're watching for next week. Monday starts infrastructure around the country, and there will be focuses on how to fund needed improvements here and there. On Wednesday, Dow component Cisco reports its earnings. Thursday, Walmart releases its quarterly results. Investors will be looking for comments on the impact of tariffs and looking at the growth in its digital business as well. And that's what we're watching for next week. The Securities and Exchange Commission has approved a new Silicon Valley stock exchange. This exchange is backed by a number of tech entrepreneurs who hope that the move will give high-growth technology companies more options to list their shares outside the traditional exchanges like the New York Stock Exchange and the NASDAQ. And by the way, this will be the country's 14th stock exchange. Finally tonight, you know, the talk today may have been about trade and about Uber, but Jeff Bezos also made a big statement, not related to Amazon, but to his vision for space exploration. And his grand vision and aggressive timeline may sound like he's taking a page from Amazon's playbook. Morgan Brennan has our story for us tonight.
Amazon CEO Jeff Bezos unveiling Blue Moon, a lunar lander his space company Blue Origin has been developing for years. At an invite-only event in D.C., the world's richest man taking his lunar ambitions public, saying the lander could be used to meet NASA's new ambitious deadline of getting Americans back on the moon in just 5 years.
I love this. It's the right thing to do. And for those of you doing the arithmetic at home, That's 2024. And we can help meet that timeline, but only because we started 3 years ago. It's time to go back to the moon, this time to stay.
In what was perhaps his most sweeping comments to date on his interplanetary vision, Bezos betting on a future in which Earth is utilized for habitation and light industrial use, and space for heavy industry like mining and manufacturing. And he also believes at some point we could have self-sustaining orbiting colonies called O'Neill colonies. But that will come later. Right now, Bezos sees the current task as making space less expensive and more accessible, a strategy that starts with reusable rockets.
We have to use the resources of space. We must have a future for our grandchildren and their grandchildren, and it's this generation's job to build that road to space so that the future generations can unleash their creativity. When that is possible, you will see amazing things happen.
Bezos, who's been selling about $1 billion worth of Amazon stock annually to fund Blue Origin, also making clear he's not as interested in Mars, unlike Elon Musk at SpaceX. Rather, he's betting big on space for Earth. For Nightly Business Report, I'm Morgan Brennan.
And to read more about Jeff Bezos' space vision, you can head to our website at nbr.com. Before we go, a look at the crazy day on Wall Street today. The Dow was up 114 points after having been down 350. NASDAQ added 6, the S&P was up 10. And despite today's gains, the NASDAQ and the S&P this week suffered their biggest weekly declines of the year. That is Nightly Business Report for tonight. I'm Bill Griffith. Thanks so much for watching us. Have a great weekend. Happy Mother's Day. We'll see you on Monday.